1.08 USD minus 0.0300 minus 2.70%. The number you see flashing on your screen right now is 1.08. That is the live intraday price for ASST, down roughly 2.7% on the session so far. If you are just glancing at a standard watch list or a basic mobile ticker tape, you are seeing a penny stock oscillating with the typical volatility of the microcap sector. You see a chart that looks choppy, perhaps indecisive, and you might instinctively categorize this as just another small tech play struggling to find its footing in a high interest rate environment. That is the expectation. That is what the surface-level data tells you. A company called ASST Entities, traditionally known for Discord community management and digital marketing, trading near the $1 mark. But here is the reality, and it is a reality that creates a massive disconnect between what the average retail investor sees and what is actually happening behind the curtain. If you think you are looking at a social media marketing company, you are looking at a ghost. The entity trading under the ticker ASST is currently undergoing one of the most aggressive, high-stakes metamorphic shifts in the entire public market. We are not talking about a simple pivot to a new software product or a rebranding exercise. We are watching the real-time construction of a Bitcoin Treasury company, effectively a vehicle designed to absorb Bitcoin onto its balance sheet in a way that mimics the playbook of industry giants like MicroStrategy, but with a unique structural twist involving Strive asset management. The market is currently pricing this as a speculative penny stock, but the ambition here is to create a new standard for corporate finance, where Bitcoin is the primary reserve asset. The tension between that massive macro ambition and the current share price of 1.08 is where the entire story lies. When we look at the intraday action today, that 2.70% drop is not just random noise, it's the friction of a shareholder base transitioning. You have legacy holders of asset entities who bought in for the digital marketing thesis, exiting the position while a new class of macro-focused investors is stepping in, trying to front-run the full integration of the Strive asset management philosophy. The volume we are seeing today is indicative of this handover. It's not the panic selling you see in a failed biotech trial, it's the churning of a cap table. If you pull up the chart on your Fidelity trading platform or look at the order flow on Interactive Brokers, you'll notice that the bid-ask spreads are slightly wider than usual for a stock of this volume. This suggests that market makers are still trying to price the risk of the merger execution. The downward pressure we see right now at 1.08 is likely a result of short-term profit-taking from those who played the initial merger announcement pop, combined with the broader market's hesitation regarding small-cap liquidity today. Let's strip away the noise and look at the mechanics of what is happening, because this is where the smart friend conversation needs to happen. Most people treat stocks like Tesla stock or Nvidia stock as proxies for innovation, but they are operating on established business models, selling cars or selling chips. ASST is attempting financial engineering. The merger with Strive Asset Management is not just about combining two companies. It's about utilizing the public listing of ASST to access capital markets for the express purpose of acquiring Bitcoin. This is a strategy that requires immense capital efficiency. When you see the stock hovering at 1.08, you have to ask yourself, is the market pricing in the future Bitcoin holdings, or is it pricing in the legacy business? Right now, it seems to be caught in between, which is precisely why the volatility is so high. The recent price action has been a series of sharp spikes followed by slow bleeds. This is characteristic of news-driven assets, where the narrative is powerful, but the execution details are still trickling out. For instance, when the news broke about the potential for a tax-free Bitcoin exchange, where investors could swap Bitcoin for stock under specific tax codes, the stock reacted violently. Today's cooling off to 1.08 represents the market waiting for the next tangible proof of concept. It's the classic show me phase. Investors using Schwab Intelligent Portfolios or similar automated systems likely won't have exposure to this yet because it doesn't fit the traditional risk metrics of a steady earner. This is a high beta, asymmetric bet. You're betting that the management team can successfully raise capital without destroying shareholder value through excessive dilution, a tightrope walk that very few management teams can navigate successfully. Let's talk about that dilution risk because it's the elephant in the room and the primary reason the stock isn't trading higher. To buy Bitcoin, you need cash. To get cash, a company like this often has to issue shares. If they issue shares at 1.08, they have to issue a lot of them to raise a meaningful amount of money, which dilutes your slice of the pie. The expectation that bearish investors are betting on is that the company will print so much stock to buy Bitcoin that the share price will be crushed under the weight of the new supply, even if the Bitcoin holdings grow. The bullish counter-narrative, and the one the company is pitching, is that the Bitcoin they acquire will appreciate faster than the dilution hurts you, effectively increasing the value per share in the long run. It's a race against time and math. Now, before we go further into the financials, I want to pause and ask you a question about your own portfolio strategy. This pivot to Bitcoin is incredibly polarizing. Some see it as the only hedge against inflation, others see it as corporate gambling. Comment below how many shares of ASST you currently hold, or if you are sitting on the sidelines waiting for a specific entry price. Are you buying the Bitcoin Treasury thesis, or do you think this is just a short-term hype cycle? I really want to see where the sentiment is among actual traders. Back to the analysis. We need to discuss the legacy business briefly to understand what is being left behind or repurposed. Asset Entities Inc. was built on the backbone of the creator economy. They specialized in Discord community services, designing, developing, and managing servers for influencers and brands. They had a suite of tools like AE.360.ddm that helped creators monetize their communities. In a world where Robinhood users gather in massive Discord servers to discuss AMC or GameStop, this business model made sense. It was a picks and shovels play on the social investing boom. However, that business is capital-intensive in terms of human effort and scales differently than a financial holding company. By pivoting to Strive's model, they are effectively saying that the return on assets, ROA, from holding Bitcoin is superior to the return on assets from managing Discord servers. They're not necessarily abandoning the technology. Tech capability is useful for a modern financial firm, but the narrative has shifted 180 degrees. This brings us to the broader market context. You have to look at ASST in relation to the macro environment. We are in a period where the Federal Reserve's interest rate decisions dictate the flow of capital into risk assets. When rates are high, money usually flows into safe yields like Fidelity mutual funds or government bonds. Speculative assets, including small-cap stocks and cryptocurrency, usually suffer. However, we're seeing a decoupling. Bitcoin has shown resilience, and companies proxying Bitcoin are acting as leveraged bets on that resilience. If you are holding Apple stock, you are worried about iPhone sales in China. If you are holding ASST, you are worrying about the spot price of Bitcoin and the premium to net asset value. It's a completely different anxiety. The institutional activity here is worth noting. Usually, in a stock of this size, you see almost exclusively retail flow, people trading on their Robinhood app or SoFi Invest. But with the Strive merger, we're seeing interest from different types of funds, those looking for alternative exposure to crypto assets, without holding the coins directly, perhaps due to mandate restrictions. If ASST can successfully list on major indices or attract ETF flows, the liquidity picture changes overnight. Right now, at 1.08, liquidity is decent but not deep. A single large whale exiting could tank the price 10% in minutes, just as a large entry could send it halting upward. This thin order book is a double-edged sword that every trader needs to respect. Let's analyze the Strive factor. Strive Asset Management has made a name for itself by being anti-ESG and pro-shareholder value, focusing often on the energy sector. Bringing that philosophy to a Bitcoin treasury is fascinating. It implies they will not be apologizing for the energy usage of Bitcoin. Rather, they will likely frame it as a sovereign asset essential for financial freedom. This ideological stance attracts a specific loyal investor base, similar to how Tesla stock attracted a cult-like following that ignored traditional valuation metrics for years. If ASST can cultivate that same loyalty, the stock price could decouple from the underlying fundamentals and trade on sentiment premium. This is what the bulls are banking on, that the Strive brand carries enough weight to buoy the stock during the accumulation phase.